Hey everybody, Dave Bartosiak here, and I'm doing my chart of the day on Snap, ticker SNAP. Let's go ahead and take a look at Zacks.com and see what I see following this big earnings report. So if you look here on Zacks.com, down over 35%, Snap has crackled and popped. I'm sure everybody's using that silly metaphor today. Zacks are ranked number 3, hold, heading into it, F for value, A for growth, B for momentum. Up a round out with a VGM composite score of C. Top 38% is the internet software industry. Taking a look at these detailed estimates. Now, again, this was heading into this report. The numbers look pretty good, and even our Zacks consensus estimate was creeping up for the current quarter heading into this report, as well as the current year and next year. So everybody was really feeling kind of bullish about this. And if you look at the last few earnings reports, you had several surprises in a row. Translate that over to that price consensus and EPS surprise chart, and you can see there was this sort of earnings trough, and then it started to pick up a little bit. So this little pickup is what helped that stock rally. But unfortunately, it looks like this rounding out process was actually just a little bit more to the downside. So that's not a good thing. When our Val Boni line here is this 0 on the EPS, and if we're starting to dip down below that again, that's why investors are disappointed, and that's why the stock is doing what it's doing. But what is that stock doing? Check this out. We're ticking up, trying to get up over 17 into that $18 range. Couldn't happen. You get bids down under 16, a little bit there. And then the 50-day moving average came into play heading into this report. Had a couple of days where we dipped down, found some support. Now look at this gap down. Should come as no surprise that it made its way almost exactly to the 200-day moving average. That's well within today's range. Now we're starting to sell off on some heavy volume, running away from it. So in the short term, really not a good sign for Snap, not only from the actual fundamentals of the earnings report, but this gap down that's now below that 200-day moving average is not a good sign from a technical perspective. Now, I do want to go back to when we did have a gap down here in July following that report. But when it got to that 200-day, the wick went underneath intraday, but it finally caught a bid. Not the case so far today. Day's not over, as it's 1:44 right now, so we have plenty of time. But something to keep an eye on for the next couple of days is this 200-day moving average and Snap to see what happens to that price. Will it recover or won't it? Well, there you have, folks. That is my chart of the day. It is Snap, ticker SNAP. Be sure to check out Zacks.com/promo for this week's deal that's going to get you in touch with Zacks Ultimate and all the great stuff that we have there. So for everybody here at Zacks, I want to say thank you so much, and we'll catch you next time.